Hey guys, what's up and welcome to a new, Tesla update video. So today, let's go over Tesla, the market, what we can expect for the new year, I guess, and for this month of January, maybe even for the rest of this week. Again, it is of course a shorter week since today is the first day of trading because Monday was of course closed. But yeah, let's just get into it. If you guys enjoy the video, don't forget to hit that like button if you find it useful, informative, whatever, or if you just enjoy the copium or the therapy or both. Don't forget to hit that like button. Also, don't forget, guys, none of this is financial advice. Make your own decisions. Do your own research. But let's jump into it. Tesla ending the day down 12.27%. At some point, I think near the bottom, it was down like 14%. 14%. Even 12.27% in one single day is astronomical. That is an extremely aggressive move to the downside, which is extremely unfortunate because it looked like it was once again finally looking to maybe break out, looking to at least get some momentum back, some bounce, some bullish sentiment, even if it's short-lived, back. And then what happened? We got earnings. Well, not earnings, so well, kind of earnings. We got the delivery report yesterday, earnings, of course, on the 25th, I believe. I think it's the 25th. Yeah, and we got the delivery report yesterday that Tesla released, which if you haven't seen, we'll very quickly bring up. Now, I'll give you guys, my quick, 2 cents on this overall, because this is what essentially affected. Now, okay, I personally believe that this move is a substantial overreaction. The main reason, of course, being that the delivery reports did actually miss consensus, right? Wall Street consensus for deliveries was around 418 or 16, something like that. And Tesla, of course, posting just over 405, right? So that is, of course, a miss. It's only like 3-ish%, like 3 to 4%, somewhere along the lines of that, which is like not that much. I mean, it is a miss, but like if Tesla was still trading up at, more elevated levels, like let's say up in the 200s or even like the very high 100s, and then they posted a miss, so it's only like a 4%, 3 to 4% miss. Then we get a drop like this. Okay, then, maybe it's understandable. But the fact that we're already so suppressed and we still dropped another like 12.5% on a very minimal miss and an overall still record. And on top of that, still showing 40% growth year over year. And over the last 3 years, I think the compounded annual growth is still like over 60%. Like the fact that we're still seeing these numbers, even in the environment that we're at, while most other automakers, like manufacturers, like, Honda, Toyota, whatever, Ford, GM are like break even at best in terms of growth at best. Most of them are actually declining. And even most tech companies and sectors are like barely growing at the very moment, right? They're like, it's looking not so hot right now for them. And Tesla's still growing 40% quarter over or year over year. I don't know, man. That's not too shabby in my opinion. I personally, now, it is a miss. Obviously, it's a miss to overall Wall Street analysts and most people's estimates, right? Most even like Tesla bulls that are not like Wall Street analysts. I think we're sitting at like 420 plus, like 420 to 430, right? So it is overall, of course, more disappointing than people were hoping to see. But like, if you overall look at it in a more broader picture as opposed to this very zoomed in look, it's not that bad, man. Like, it's really not that bad. It's like one of the few car and or tech companies that's actually growing meaningfully, right? Meaningfully. And if you look at Tesla, Yahoo Finance. Now, Yahoo Finance is actually not going to be showing Tesla's forward PE after today's movement. I think it usually shows it. I think it updates it like after today. The forward PE. I'm trying to find the forward PE. I'm just go to the statistics. I think it's somewhere around here. The forward PE is sitting at 24, and after today's movement, it's probably like closer to 20 now, right? This is the delayed forward PE of like 20, very low 20s, and a company that's growing like this, just fundamentally is very suspicious. Now, obviously some people might think, oh, even 20 is too high, guys. I mean, it's really not. I mean, the company's still growing like 40% year over year, like annually. Like on a 20 PE, come on. Anyway, so that's just like a little bit of a fundamental thing. I personally think this is a severe overreaction, right? I think this is just, it's just there's been so much turmoil in the stock, Elon, etc., that like it feels like any negative right now is just like extremely over exaggerated, right? And I think that's essentially what we're seeing here today. I'm personally not worried whatsoever. It sucks, it hurts, I'm hurting. I'm not worried. I don't know. I strongly believe this is an over exaggeration. I'm personally pretty okay with these numbers. Again, taking into consideration the overall, like everything into account, right? The macroeconomics, the potential, like, I mean, we're essentially in a recession at the very moment, how pretty much all of Tesla's peers around them, like I said, are negative, if not maybe slightly flat at best, right? It's not that bad. It's really not that bad. So, it is what it is. But, taking a look strictly at the technicals again. So we have essentially another bullish divergence forming. Now, I hate using this for now, mainly because we've had we had one major bullish divergence that was forming all the way back when we were trading here, right? Back when we were trending down like this while the stock was actually arguably trending upwards. And that was a nice little bit of a bullish divergence. However, we do have yet another one being formed, as you can see right over here, where the low over here was formed back on the 109 level when we dropped just a few days ago last week. And then today we went even lower and we closed even lower, most importantly, right? So we made a new 52-week low. We made a new just low in general in terms of closing price as well. But you can see we did make a pretty sizable higher low on the RSI. It's like it just feels like the stock is trying its like absolute hardest to just like find any glimmer of hope right now to just get some bounce, and each time it's somehow or something is crushing, whether it's Elon, whether it's the delivery numbers, whether it's something else entirely. But we are looking like we're trying again. We are looking like we're looking for another potential attempt at this bullish divergence being played out. So again, we'll see as it forms. At the moment it is forming and it's looking pretty okay. You can look at the 2 hours, you can see another example right here as the stock made a lower low, a pretty noticeable lower low. It's a pretty noticeable higher low on the RSI. Just yet another example. Again, this doesn't mean it has to play out as we saw previously, where we had the bullish divergence being formed and it looked pretty promising, and then Elon ruined it. But it doesn't mean it has to play out. Just something to keep in mind, right? So that is definitely an actual important aspect to kind of keep in mind as it hopefully starts to form, and hopefully we get a move to the upside. I personally still believe, and I would not be surprised whatsoever if pretty much maybe up until earnings we get a run up to about 150. That would not shock me whatsoever. Best case scenario, which I don't really see happening as much anymore, it's not impossible, would be a run up to around the 160s area, right? That to me, 160s to 180s, that would be like the realistic, pretty best case scenario, where we just essentially retest this overall support area that we held several times. Again, this is a weekly, right? So each candle is a full week, so you can see just how many times we bounced off this general area. 1, 2, 3, 4, 5. We had 5 weeks of bouncing right around this kind of 180, 177 area that we held, tried our damn best to maintain this area, and unfortunately we did fall. And you can see as we fell, we pretty much came right back up on this weekly candle right here, retested it, couldn't get back above, and then we essentially collapsed then from then. All right, so in other words, it's very common when you break down these certain things that you overall actually get a true retest, where you essentially break down, come up, retest, and then most likely get rejected and fall back down. But this is like mainly because this also would break us out of this channel, and I just don't see us breaking out of this channel just yet. I mean, if it does, fantastic. I just don't see it happening, which is why excuse me, which is why I personally wouldn't be surprised to see the 150s level potentially getting tested, because as you can see back here, this was a major resistance area as well. And we had a bit of a decent resistance around this 150 level as well. We were in such a massive downward momentum that we did blast through it pretty easily. In all honesty, we sliced right through it. But in theory, the 150, it's like a mental kind of area, resistance and support. And of course, all the way back here, we did trade and act as a massive resistance several times all the way over here as well. So personally, my main target right now that I would be a little disappointed if we don't see is like 150, maybe slightly below 150, maybe like as low as like 140s. I would want to see, which would also line up with this potential retest of this overall, this little downtrend that we are currently in, which most likely will reject us if we get there, let's say somewhere around, closer to earnings around, maybe 17th of January, give or take, right? That is kind of what I wouldn't be surprised. On this red day, we also had the largest volume we've seen yet, believe it or not, which is interesting to see. So probably some institutions maybe dumping, maybe some more margin calls. I would also assume a lot of people went pretty bullish on Teslas after this little run. They probably thought that it's looking great, that the delivery numbers will surprise. It obviously didn't. I mean, it did, just not in this way I'm sure they hoped. So a lot of people might have been getting margin called, liquidated, panic selling, all that stuff. But I personally believe that this is a short-term bear trap. And I personally believe that, you know, worst case, I think from here will be 100. I wouldn't be surprised if we do retest 100. If we do, like I said before several times, back when we were still over here, I will personally be entering, again, small portion of my portfolio calls if we actually get to 100. I don't know if we will. It's like a 50-50, but I don't think we'll go much lower than 100 before we actually get some sizable bounce again to around that 140s to 150s area. And that's essentially what I'm currently predicting at the very moment, right? And that's essentially what I'm seeing. So it's a tough scenario, and it's extremely difficult to truly predict this market at the very moment, but that would not surprise me whatsoever. And the red line of the Bollinger Band you can see is, of course, somewhere around that 100 level, plus, of course, 100 just being a natural psych level, of course, as well. As you can see, it did act as a resistance and support many times all the way over here, and just, you know, in general, it is a psychological number that will, in theory, act as that as well. Now, my overall potential bottom price target for Tesla would not surprise me if we get down to around the 70s level, guys. That would not surprise me. It doesn't mean we have to go there right now. I personally think we will get a bounce first up to this 140s ish, 150s level before that. But man, I would not be surprised if we potentially get a drop after maybe the earnings report or something like that, maybe starting in February, down to that level. Like, that would not shock me whatsoever. So something like along the lines of this retest, and then ultimately make our way down here somewhere around this general level right here, make a bottom, and then probably consolidate. And then I think from there we hopefully might actually start getting a bit of a rally and actually form the bottom in this bear market for Tesla, which would be a sizable correction. Like, if in theory we were to bottom at that kind of like general level, that would be an 83% drop from all-time highs, which is a pretty disgusting drop and a pretty monstrous correction, to say the least, right? So that's just something to keep in mind. On top of that, the market does look like it wants to overall still fall. Now, I wouldn't be surprised if the market also gets a bit of a rally here to fill up some gaps, right? And potentially go even as high as 400. That would not shock me, which would also retest this overall trend line and gap fill over here, which, if it happens pretty much sometime in the, first half-ish of January, which is kind of where I'm personally thinking Tesla will also run. That will kind of line up pretty well, and that will pretty much take us to the resistance of this overall SPY resistance level. As you can see, this massive red line, we rejected here, recently rejected here, probably get one more rejection here, and then I think that will continue or start that next leg down for the market, which I think will also potentially put some pressure on Tesla as well, and that's potentially what could make Tesla come down all the way to this it's anywhere between 90 to 60, I think, will be the bottom. Where? It's hard to say exactly. No one knows, right? And if anyone says they do, well, they're lying. But anywhere, that's a massive range, the 30% range, but somewhere in this range, in my opinion, could potentially be the bottom. So we'll see. What I did personally, I did sell one more put. I sold a 100 puts, just one. That's all I got left for right now. For, I think, June, I think I even went as far as June, I believe it was, right? So made some some premium on that. So I'll take that for now. Wouldn't mind buying 100 shares at $100 per share. That would not be bad whatsoever, in my opinion. Not financial advice, just my thoughts. But long term, the prospects are phenomenal, guys. I'm not worried. I don't know why. I feel like I don't know, man. I just don't care anymore. It is what it is. Let the market do its thing. Let the market just, just let the market do its thing, guys. Just let it do its thing. Just, if you're someone that's gambling on short-term things, options, whatever, calls, if you're in margin, then I would be a little bit worried. I'll be completely honest. However, if you're not on margin and you're just chilling with shares, especially, I personally don't think there's anything to worry about. If Tesla goes bankrupt, so be it, right? Obviously, there is always a risk. It's never zero. I don't think it'll happen. And I think the long-term prospects of Tesla are phenomenal. I'm not worried about that at all. I feel very confident. And yeah, now another thing to keep in mind as to what happened kind of a little bit more intraday, as you can see, we came down to this level to potentially do a double bottom right around this kind of 107-ish level, which we did right this candle, but then we collapsed right below it. And as usual, this is what I always say, whenever you crack a level, you usually come back up to retest it. That's essentially what happened here. We cracked the level, came down all the way to the 104s, which I did talk about before, 104 to 100. I talked about that, I think, like last week, which I think could be a pretty good level to get, calls. Again, just my opinion, could be wrong, not financial advice. But we came down and then we bounced off of that 104 to 100 level, right? Which I still think there's a chance we come actually down to 100. But nonetheless, we came down and then retested this level that we actually held before, as you can see with this candle. And now we're essentially getting rejected with both of these candles right here, right? So that's just an example of what I mean by, whenever you, what is that thing on my screen? I don't know, it's weird. Whenever you break certain targets or break certain levels, you know, it's very common to retest them, which is why I personally wouldn't be surprised if we do that for about the 150s level, which would also line up with being within this channel still, which I just don't think we're strong enough to break out of just yet, just because it doesn't really, I mean, I don't see why we would, honestly. But yeah, that's kind of what I see, guys, and that's essentially what I'm thinking. So yeah, let me know what you think down below. Absolutely astronomical drop today. You know, just hold on strong, guys. I'm there with you. Again, hopefully, you know, seeing my confidence and not, you know, panicking about this, hopefully helps you guys feel a little bit better. I hope it does. But again, I'm not too worried. If we go down to the 70s, I'm not gonna lie, that would be painful. That would be excruciatingly painful. It would be. But sometimes it's just kind of how it is. But yeah, thanks for watching. So let me know what you think down below, and I'll see you guys for the next one. Peace.